All right, good evening, guys. Today is August 31st. It's about 11:30 at night Pacific Standard Time. Tomorrow will be September 1st. It's the first Friday, so that means non-farm payroll. When I do trade the non-farm payroll, it's a very I only trade a couple of markets, and I try to make sure that my stop is either really tight or really wide, depending on my expectations. Um, a lot of times it's relatively simple to just stick to your accounts, and it doesn't matter what the non-farm payroll number comes out. Um, you'll still, if your counts or your labelings are accurate, your labels are accurate, then it doesn't matter what the payroll is going to do. So just looking at a couple dollar pairs. Try to keep this video relatively short because that's for the most part. If you do see a spike in any direction, it's most likely going to be in the euro, dollar, possibly the pound dollar. You don't see too much of a spike in the Aussie. You may see it in the dollar yen. You may see it in the dollar Swiss. But for the most part, it's the euro versus the dollar that you see the major spike, if any spike at all, depending on the particular outcome. But in the euro, if this is wave 3 and this is wave 4, then actually this is wrong. But basically, when I took this trade, as you can see, I was looking at 1.382. So I was looking to go in around 2020, give or take. I expected the market to go to around 2030, 2040. It went above 2060, which was after 1.382. The next hurdle and the next point of resistance is 1.618, which is basically to get these particular numbers I got here. There's a couple of ways that you can do the measurements of a projected wave 5. And what you do, reverse Fibonacci, basically, is that you'll do the Fibonacci extension, and you'll start at the bottom of wave 4. You'll bring it over to the top of wave 3, and then you'll bring it right back to the bottom of wave 4. And then from there, what you'll do is it'll like 100% will be like right here somewhere. I remove all of the 0.618, 0.382, all that stuff. I remove all that, and I normally put two levels, which is 1.382 and the 200%, and that's where it normally tends to fall. As a third level, you can also put 1.618, but just the way I was taught reverse Fibonacci, it was just two levels. And that was I was actually taught this by a seminar from I think it's Jeff Gordon, I believe, or Jeff Corrin, one of the two. But he's a Trader's Classroom on Elliott Wave International. But basically, this was reverse Fibonacci, and it was just 1.382 and 2.0. But if it does go above 1.382, then the next hurdle of resistance would be 1.618. And as you can see, 1.618 of this particular reverse fib was exactly where it ended up finding its resistance. And so far, this is not a confirmed top of wave 5. So this is why I don't have this as a wave 5, because see, this can be wave, wave 3 here. This, instead of this being wave 4, this could be A. So I can put alternate A. Let's do A of 4. And instead of this being 5, this can be B. And then if you see a spike down, well then, as long as it doesn't, if it goes, long as it stays above 116.65, well then this can be the start of a triangle, basically. And from the indications, it does appear that this particular move just finished the wave 3, and this can be possibly, a possible wave 4, and sometime we may see, I'm sorry, tomorrow with the non-farm payroll, it is possible that we will see a spike down, which will find some serious support at around 1750. So you're looking at a real nice 100 pip move if my analysis is correct. But what will likely happen a lot of times with non-farm payroll is that through the night you may see spike. I mean, prices just kind of do a few ticks here, a few ticks there, just kind of move a little bit, but it'll keep just zigzagging basically, and then you'll see price kind of come, right back to here before it spikes down, and then throughout the day it spikes down. This will be tomorrow will be pretty much the last day for at least 3 days because of the Labor Day weekend. So if I had to go with a primary, my primary will be that the dollar in the euro, and only the euro, most likely would get would become strong. But at the end of the day, this can be one. This can, I mean, if you look at it on a, let's take a look at it on a smaller time frame. And if you look at it on, let's look at it on a 60. Let's see what we come up with there. See, this is a 15-minute chart where you can clearly from here count a 1, 2, a 1, 2, 3, 4 over here, then possibly 5 of 3, possibly. Then you can have an A, maybe A, B, maybe just I'm trying to just see if I can come up with something. But if this was an A, B, no, that wouldn't be the correct count. So this would be like 3 of 3, A, B, C, 4, then maybe 1, A, B, maybe C here, and possibly the end of wave 3 here, unless this is a 5-wave move down. And if this is a 5-wave move down, you clearly see 1, 2, and a 3-wave move up. So if you have to look at it from a 15-minute chart, prices can indicate that there should be another move to the downside. And what we're already seeing is price is starting to penetrate the cloud, but this is telling me something different on the 15-minute. So what is likely to happen is price can come in here. It's going to find some serious support in this level, which hence is this particular color, which is bullish, and then it may kind of hover back up, and then just before, as soon as the payroll comes out, that's when it'll spike down. Looking at a 60-minute chart, let's go here. 60-minute, make sure I'm on the EURUSD. I am, and you can clearly see that that was a 1, 2, maybe a 3, a 4, and a 5. Now you count 1, 2, 3, 4, then 1, 2, 3, 4, 5. This is possibly 3 here, so this is possible wave 3. So let me see here. Let's do this. Let's do this. Three, 4, 1, 2, 3. Yeah, that's 3. So 1, 2, 3, 4, 5, 1 will be right there. So I would put a 1 here, and then a 2 here. And being that this 2 was a bit choppy, wave 4 should be sharp. As you can see, if this was 3, boom, wave 4 was a sharp correction, since this particular wave 2 was not. It was a bit choppy. Let's see. So that 1, 2. and then this is 3. This can be maybe either a 4 or A. You can see a possible B come in and find some support here, and then C of 4 can probably come back to right there. And I mean, at the end of the day, the non-farm payroll can actually, it can actually come down into this area, and then as a non-farm payroll comes, it can just shoot back up. Because if this is 3, well, this can be A, and then in prices can do nothing, and then all of a sudden shoot down for an expanded flat B of 4, and then shoot back up, but it wouldn't be able to go above this particular high here. So this is why sometimes it's best to just let it play out. This is telling me something, and I'm keeping an eye out on that. It's telling me that me having a primary count bearish is not the best particular count, especially based off of what's going on. So what I'll try to do is post a new video maybe if I wake up that early before the payroll, but my advice would be to not trade it and just to let it play itself out. And then if you want to take a trade, you take a trade once it finds some resistance or support in the particular area, if you see a count. But one particular trade that I want to talk about for sure, I find is pretty funny, is the pound versus the dollar. Now, if you go back to my charts that my videos 2 and 3 days ago, I've been updating the 240 pound dollar about the past 3 days. And before all of this, it was actually right here, and I had drew this line where I had the A, and I said this is a possible A, then maybe a B, and I said the C would probably find some support here or right here where my B is. The funny thing is that the price went directly into my B, which is I would love to take credit for saying that I wanted price to go exactly where my B was at, but that really wasn't the case. I just find that pretty funny. I was expecting price to find some support right around 128.75, give or take. It went down to 128.53, but it normally does about a good 20 to 25 ticks, below or above where some of these support and resistance levels are at. Not to mention, after this particular support level, the next hurdle was right here, and that's exactly where it found its support level. So now I can actually move this to get this out of the way so that you can see it. And what's more than likely to happen is where my arrow is at. So if this is B, well then, if this is a 1 and this is an A and this is a B, well, you're gonna have a 1, a possible 2 that's gonna come back somewhere around here, and then you should have another 3-wave move up for wave C, which is more than likely gonna go to about 130. So this particular market doesn't mean it's gonna happen tomorrow. But if that's the case, one or two things can happen. Price over the next several hours can shoot up between the European markets, and then the dollar can get strong for the end of wave 2. So what you can see is a 1, 2, 3, 4, and over the next couple of hours, 5 of 1 can end at 129.72. Let's just say, give or take, it'll probably find some resistance right at 129.72. That will be the end of wave 1 of, let's just say, let's just say A of C, basically, or you could say 1 or 3 of C, because 1, 2, 3, I only can count 3 waves. 1, 2, 3 here. So this can be, let's say, 1 of C will be basically right here, give or take, or A of C. And then once the payroll comes out, you can see a spike down, which is basically dollar strength that can go from 129.75, give or take, and it can drop 100 ticks easily. From 75 down to 128 75, and it'll find some support right here at 128.76, give or take, again for pretty much a deep retracement wave 2. It'll probably find some serious support at around 128.80, somewhere around there just before this, but it will penetrate the cloud and come back in for a deep retracement, possibly 0.786 retracement of 2, and then next week after Labor Day and stuff, you'll start to see wave 3, wave 3, 4, and then wave 5 of C, or basically A, B, C, basically for wave 2. I did take a long in this position once I saw this, and I was like, okay, I'm pretty sure this is wave B now. Then I waited, and then I jumped in, and my stop is still here because I'm expecting a retracement to find some serious support here. So I'll keep my stop here. Actually, my stop will most likely be about right there if that's wave B, and then price may come back in this area during the non-farm payroll, and then shoot up sometime next week for the wave C. I'll probably get out at around the 50% level for about close to 200 ticks, and then I'll wait for it, and then that's when I'll take my long position on wave here. So that's just two markets. I'm going to end this honestly. But as far as the non-farm payroll tomorrow, if I don't want to be right, honestly, I really don't. I want to make money, so you want to keep that in mind. If I wanted to be right, I would say that most likely the dollar is going to be temporarily strong. So you'll see dollar strength tomorrow. That's if I want it to be right. Honestly, I don't care what it does. I want to make money. So when it comes to trading psychology, you may want to have that particular type of psychology. Don't try to predict what's going to happen in the market. Just make sure that you're able to make money. So to end on that, I don't care what it does. Either way, I'm going to make a profit. But just based on the analysis, it does appear that price, the dollar should get temporarily strong. However, it is the market, and the market does what it wants to do. So other than that, everything is doing pretty good. The dollar yen trade, I'm down a little bit, but I'm still up 80 or so ticks. I'm not in the CAD. I'm not in too many other trades. Actually, I think I'm in the CAD. No, I'm in this one. I'm in this one. And I was down in this one pretty big. I actually jumped in a little too early. I jumped in here, and it actually went on me there. My stop stayed here. I was down 114 ticks. I think I had 140 tick stop loss. And as you can see now, I was a little bit premature, but I mean, I'm up 121 ticks, so I can't complain on that one. And next week, once I label, I'm gonna have the New Zealand. I think I'm gonna have the Swiss labeled, and possibly the Euro CAD. Let me see what's up with that one going into next week, and then I'll just keep an eye out on everything else that I'm in, and just update as I go. And the Euro Yen, because I think the Euro Yen is going to eventually have a good trading opportunity. So, but other than that, well, I didn't even look at this one. Look, we spoke of this. I'll end it on this one. We spoke of this, I believe, yesterday, and the day before that. And as you see, I was able to get in, and I'm up 73 pips, just like that. So it is possible that this is a B. Then a 1, 2, and then you're going to see 3, 4, 5 move down here for A, and then W, X, 1, 2, 3, A, then B, then possibly C for Y. So yeah, I mean that's how it is sometimes. I forgot that I even took this trade, but I believe 2 days ago I had this labeled totally different, and I think I titled that never get married to your one label, and I had I set my entry like up here, and then all of a sudden I said, you know what, I'm gonna get in a little bit lower because I didn't know it was going to go there, and it didn't, because I set it right here at 100. Actually, I had it at 100.64 where my current stop is at. Then I brought it down once I changed my labels, and as you can see, where I got it at 99.67, it stopped at basically 1.002. So it went above me about a good 40 ticks, 35 or so ticks, but I'm up 70. But we'll see tomorrow where it's at and go from there. I want to leave it there, and I may be able to post something tomorrow just to see what happened with the non-farm payroll. Until then, you guys, happy trading.